Thank you very much. Thanks, GBBC, for inviting me. Pleasure to be here representing Onyx by JP Morgan. Again, I'm Basak Toprak. I lead coin systems in EMEA for Onyx, as well as incubation efforts for our team globally for coin systems. So before I start about the topic of today, a few words about Onyx. Onyx is a business unit that was set up in 2020, but as many of you know, our history in blockchain goes further than that. We set up Quorum blockchain, and we had a blockchain center of excellence, which really took us to 2020 when we set up Onyx as a business unit, really focusing on re-architecting the way we use and process information, money and assets using blockchain technology, but focusing on commercial applications. So under Onyx, our coin system platform offers JPM Coin deposit, blockchain deposit accounts. JPM Coin has been live since 2020, and it helps our clients move money 24/7 in US dollar and euro with programmable payments capabilities. So these include use cases such as intra-company, so moving funds between a company's own accounts globally, or counterparty payments. So these could be related to supply chain payments, but also facilitating the cash leg of intraday repo application. So under Onyx Digital Assets pillar, we provide applications that focus on tokenized assets that are used for use cases such as intraday repo, where JPM Coin provides the cash leg, as well as working on more advanced applications such as tokenized collateral network. So my talk today is about deposit tokens, which is a form of commercial bank money on the blockchain. So at Onyx, we see deposit tokens as an evolution of the work we've started with enabling blockchain deposit accounts in our own private permissioned environment. So as a next step, we enable JPM Coin on Partior, which is an independent multi-bank clearing and settlement network funded by JP Morgan, DBS Bank, Temasek, and more recently Standard Chartered. And this was born out of Project Ubin in Singapore. So Partior plans to support broader multi-asset class use cases such as DVP and FX PVP use cases, as well as serve as a complementary platform for ongoing CBDC developments. So deposit tokens is the next iteration, which holds really the potential to take deposit outside the bank's own ledger environment. So usually at this point of a talk that I usually give, I would delve into what is triggering the need for digital forms of money. But I think with this audience, we don't really need to talk about the growth in tokenization and the need for bringing cash instrument on chain. We may debate the progress, the change and progression, but the trend is very clear. One, a drive towards tokenization and the subsequent search for digital money that we trust. And two, also a need to improve cross-border payments. So we believe that there is a need to develop and represent scalable forms of money on the blockchain. Commercial bank money is the most dominant form of money today, and we believe if we build it in the right way, it has great potential to support a growing tokenized economy. So what is a deposit token? Sometimes it helps to explain what something is not to support the definition. So deposit tokens are not stable coins. Deposit token is a demand deposit claim against the issuing bank by the token holder. So this means the existing of deposit tokens is not subject to a one-to-one backing, and is already supported by commercial banks' existing depository frameworks. We also believe a native token would be more efficient versus a non-native token. And what do we mean by this? A native token is represented on the blockchain where the blockchain is the ledger as opposed to being a mirror of a deposit on an off-chain platform, which is sometimes called tokenized deposit. Deposit tokens can be built against common token standards, such as ERC20, and furthermore, the tokens can be controlled to ensure validation of holders and screening of transfers. Now, taking deposits outside of a bank's own environment, almost decoupling the cash from accounts, but still creating an environment where it's subject to controls, is an evolution. So we need to design this in such a way that we're not restricting ourselves with how current account-based models work. But we allow for models of transferability amongst token holders subject to controls designed by a trust ecosystem. So to explore these topics, we have completed 2 tests with deposit tokens, which I would like to share some details and insights with you. So first of all, in 2022, we participated in Project Guardian, which was born out of EMEA's desire to explore 4 topics with the industry. 1, open interoperable networks, 2, asset tokenization, 3, trust anchors, and 4, institutional grade DeFi protocols. So under Project Guardian, JP Morgan issued Singapore dollar deposit tokens for an FX transaction opposite SBI. SBI issued a JPY tokenized deposit, and these were traded in a cross-currency transaction. The tokens and the protocol used were designed to restrict unknown parties from transacting with the tokens and the protocol. The deposit token smart contract required that only authorized parties could instruct transfers by attaching a verifiable credential, which was developed by JP Morgan. So what the Project Guardian showed us is that we can implement controls to support transfers that are more peer-to-peer in nature. Second project that I'd like to share about is Project Orchid. More recently, we completed another test in November last year under Project Orchid with the MAS. We tested what we call policy wrappers to facilitate transfers, under the umbrella term that MAS uses, which is purpose-bound money. So MAS defines purpose-bound money as a common protocol to specify conditions for the use of digital money. So building on Project Guardian, we wanted to showcase that transfers between customers of 2 different banks can be structured in a way so that both banks can implement their own desired controls for these transfers without the need to convert the tokens each time there is a transfer between holders banked by 2 different banks. So digital money transfers that are facilitated by banks today undergo various controls and compliance checks to ensure that the transfers are conducted safely. Some of these controls are regulatory requirements, and others are controls or choices implemented by the banks themselves. These controls and checks could be implemented with policy wrappers on the tokens so that transfers are made only when these checks are successful. The deposit token essentially implements programmable conditions in the form of checks, be it compliance, policy, or regulatory checks, and they act as policy wrappers. These are potentially useful in digital money transfers where the parties involved are subject to different specific policy and regulatory requirements. For example, transfers from one jurisdiction to another where we can apply policies required by both the originating and the destination jurisdiction. So not all banks may issue tokens. That's another use case, but they may still want their clients to be able to hold other banks' tokens. For example, a commercial bank may issue deposit tokens to its own customers and may allow them to hold and transfer these tokens to other parties that are banked by another bank that shares a trust relationship with the issuing bank. So this trust relationship can be established by agreements between both banks and leverages the settlement ledger for a trusted reference to the data. These relationships, if you think about it, often already exist today between banks due to correspondent bank arrangements. Through this trust relationship, banks can create a smart contract library where the relevant smart contracts for checks can be shared among banks for the creation of deposit tokens that implement policy wrappers. This creates the necessary conditions for sharing of smart contracts for controls, where validations done by one issuing bank could potentially be trusted and leveraged by another bank. So the value of this design leverages composability, which allows modular programmed conditions. This is useful for the purposes of encoding policy and regulatory requirements, and since these requirements can be applied on a per transaction or a need-to basis. So what we learned from Project Guardian, Project Orchid, is that the requirements around policy wrappers can be reused across distinct transactions, which then streamlines the effort to ensure the necessary checks are completed as designed by each bank in the trust ecosystem. So deposit tokens is not really a new form of money. It's the same money as bank deposits that sit on a different ledger and embodies both the value and the payment rail in one. Project Guardian and Project Orchid have highlighted some of the practical use cases for deposit tokens, but there are many others. Deposit tokens can be used in all the same ways as commercial bank money is used today to make payments and settle transactions, but with the benefit of technological enhancements that improve the speed and efficiency and decrease costs and automate processes. Deposit tokens can be used for various payment types, including cross-border payments and the purchase and sale of assets, and as a tool in more effective liquidity management. There are numerous aspects of technology driving these enhancements across various use case scenarios. Most importantly, the deposit token is a merger of these two important components involved in processing payments: the information about the payment and the value itself. This technology, we can say, is quite revolutionary if you look at the current payment industry, which is built around reconciling information against value movements through one banking system at a time, while money makes its way along the payment chains. So the coupling of information and value in a deposit token allows the payment chain to shrink into a peer-to-peer chain, which includes more direct bank-to-bank cross-border payments. So this approach could benefit bank customers by reducing the time a payment takes to reach the ultimate recipient, and peer-to-peer payments can also reduce overall transaction fees. Deposit tokens can also facilitate payments for digital assets in an atomic settlement. In such transactions, smart contract ensures that the deposit token is paid to a receiving party only when the assets being paid for are delivered for direct simultaneous exchange. This process goes beyond sales transactions. It can be used whenever money and other assets change hands, such as posting a collateral for a loan or an FX transaction. Another important innovation, as we talked about under Project Orchid, is composability, which really brings everything together and is where automation efficiencies are achieved. Through tokenization, different services can be stitched together in one seamless sequence. What this means is you can bring a lot of banks' processes on chain across smart contracts in this way and really create seamless transaction experience. We think this is only the beginning of possibilities, and once we start building on use cases, we will discover more applications. we see deposit tokens as an extension of bank deposits and current depository frameworks that are in place today. We believe deposit tokens should not be confused with stablecoins, nor reserve-backed synthetic CBDCs. Deposit tokens can coexist along other forms of digital money, and especially with CBDCs in the form of wholesale CBDCs, which can provide settlement models between different bank tokens. In this regard, it's important to recognize two developments in the industry. One, recognizing the Swiss National Bank's work on wholesale CBDC issuance on SDX to support bond issues as a first. And secondly, Eurosystem's exploratory work on new technologies for wholesale central bank money settlement. The purpose of the Eurosystem initiative is to gain insights into how different solutions could facilitate interaction between target services and DLT platforms. As part of these exploratory work, we are keen to further explore the interlinkage of central bank money and commercial bank money, and how this can facilitate deposit token transferability between banks. So, as closing remarks, at Onyx, we are really excited about the potentials in front of us, and we are inspired by the momentum in the industry amongst commercial banks, central banks, and policymakers to continue to develop the future of financial services, where we believe deposit tokens will hold an important role. Thank you.